Hello and welcome to Economically Speaking, the show where we unpack the biggest economic issues shaping Nigeria and how they affect you. I'm your host Faiza Sanni, and today we are diving deep into a topic that's essential for Nigeria's growth, equity, and opportunity: financial inclusion. Now, what does it really mean to be financially included? Why do millions of Nigerians still lack access to basic banking services? And most importantly, what can be done to change this? To help us unpack all of this, I'm joined by Hameedah, Alli-Kamal, and Daberechi Orji to bring valuable insights on how we can bridge the financial divide in Nigeria. Thank you so much for joining us today. So let's start with the fundamentals. In your view, how would you define financial inclusion in the Nigerian context, and why is it so critical for national development?
Well, I would say financial inclusion, to put it simply, is the ease at which people have access to financial services and products. And when I say financial services, I mean things like being able to open a bank account, make e-transactions or e-payments, save money as well, and financial products such as access to like pension or insurance and being able to invest in assets or stocks. And this is very vital to the Nigerian context because we see a lot of Nigerians do not store their wealth. A lot of Nigerians are not financially stable, and there's a huge gap in financial literacy among Nigerians. And financial inclusion will go a long way to bridge this gap.
That's very insightful. So, what we want to know is despite mobile phone access being widespread, millions of Nigerians are still unbanked or even underbanked. Why do you think financial services like credit, insurance, and pensions still have such low uptake, sometimes as low as 2 to 7%? Is it a matter of trust, affordability, awareness, or are there deeper systemic issues?
So, like you said, trust and affordability are part of the reasons for the low penetration. But then the major reason is lack of education. People are not aware of the availability of these products. They are not aware of it and they don't even know how to use it. So there is no way the financial products are going to be able to enter into the market when people don't even know they are available and how to even access them. Another one we can even look at is the poor infrastructure. If we look at the rural areas, they have limited access to electricity and to mobile banking. So how are they supposed to access these financial services if they are not even given the like opportunity to actually access them?
I totally agree, and I think that the government should also be able to look at these issues and try to bridge these gaps. So we've seen a surge in fintech platforms like OPay, PalmPay, surge in USSD banking and mobile wallets. How do these digital solutions actually drive inclusion on the ground? Are they reaching the right people or is more required of them?
I think they are doing a fantastic job so far because people like OPay, PalmPay, these digital financial services, they make banking and the whole financial activity of an individual much easier to do, easier to understand, and reduces the bureaucracy involved. If I'm talking about things like going to the bank, we know how much time we waste standing in bank queues. And however, they still have a major role to play in terms of driving financial literacy. They could contribute with workshops and enlightenment programs, which will help increase the involvement in finances of Nigerians even more than they're already doing.
Yeah, exactly. So on the digital notes, how important is integrating NIN and BVN systems in achieving real financial inclusion, and what are their biggest roadblocks?
So like integrating them will help you verify identities of people, which will then lead to like the reduction in the fraudulent activities in the banking system. But these things are like constrained to like our BVN and NIN restrictions in rural areas. People in the rural areas don't even know that there's something called BVN. BVN is our bank verification number. People don't even know that these things exist, what they are used for, how important they are. So like government should actually like tell these people through their foreign financial campaigns and workshops to let them know that okay, this is what we can do, this is how we can integrate our financial security so that we can have like everybody can be included in the financial systems.
I think even another reason is there's no incentive for people to want to register their NIN and their BVN. What are the masses getting from NIN and BVN? They are not aware of the benefits of being registered with the NIN and BVN. And I think the government too also needs to be aware of the benefits of them, of wanting to give the masses benefits of registering NIN. If people have registered their NIN, more people are being recorded. So we have better data. Better data means we can now find policies that work with these people better. Women, youth, and MSMEs, these groups are still the most financially excluded in Nigeria. What kind of policies or products do you think would better serve these demographics? What do you think is missing today?
Well, first of all, before you can think about policies and products, you can provide them to further include them financially. You have to think about the factors that excluded some of these people. We are talking about women. You can see traditional and cultural practices that are still prevalent today are going a long way in excluding women. And we know how the youth have been excluded in the past based on the so-called godfathers or whatever. And I think policies that can be brought up to encourage financial inclusion among these. For example, microfinance institutions can go a long way in providing things like microloans to and even credits to small businesses, that's micro, small, and medium scale enterprises. And to the youth as well, the provision of things like mobile banking and USSD will go a long way to encourage them, as it's simpler to use and is more cost effective. And for women, things like group savings products, which we are already seeing some platforms popping up to contribute to this, will go a long way to help them start businesses and gain more financial stability, which will lead to financial inclusion among these groups.
Another thing that I think is missing today is an enabling environment. For instance, now in PAU, students are allowed to have their businesses. PAU has given us the platform to be able to operate our businesses successfully. So I think that if the government or even private financial institutions can have that kind of mindset, give MSME owners maybe credits to be able to start up their businesses to flourish. We can see examples of businesses in PAU like Kiko Club that are doing really, really well. So we can see that an enabling environment is very positive for MSMEs, for women, and for the youth also. So broader economic impact, talking about inclusion on the macro level now, how does financial inclusion or the lack of financial inclusion affect Nigeria's broader economy? And I'm talking about poverty reduction, job creation, and even government tax revenue.
So when we have financial inclusion in the society, people would have access to savings and they will have access to credit, which will lead to entrepreneurship. And this entrepreneurship will make people gainfully employed. When people are gainfully employed, the reduction of crime rate, there will be reduction in the crime rate, and this will then lead to like economic growth and development. So if people have access to these financial products and services, like it will lead to economic growth, because like there are plenty of opportunities for people to actually do.
The more there's financial inclusion, the more people have things to do, the more we can the MSMEs we were talking about, they're able to flourish, employ more people. That creates job creation. There's job creation. I have money. I'm no longer poor. So we can see that financial inclusion is very positive for the economy and even for the government too. Because as I said, job creation, you now have more people to tax. So instead of increasing tax for everybody, you're increasing the tax net, which benefits the whole of Nigeria. And so from a policy angle, could greater inclusion improve how the central bank implements monetary policy?
Yes, it could. We can see that Nigeria's economy is grossly informal in terms of the fact that there are a lot of artisans, traders, and small businesses which are not really formally banked or formally financially active. And financial inclusion will go a long way to making monetary policies of the government effective. Things like being able to sell bonds and selling stock to try and reduce inflation or things like that, or reduce the interest rates of banks. These can only work or can only be effective if a majority of the Nigerian people are financially included. And so it can go a long way to make government policies even more effective, because sometimes we see, the government is not really doing anything, but sometimes it might just be the policies they are putting out are not effective because there are not enough people involved in their grasp.
Exactly. So we spoke about how financial inclusion makes people be more active in the economy. So the more we have active people in the economy, the more this policy will be able to affect them. If the economy is not being formalized, these policies will only affect the people that the government know. If the government doesn't know you, it's not going to work for you. So we can see that financial inclusion really is really important in implementing monetary policy. Now let's talk about how financial institutions and financial regulatories can be responsible for driving inclusion. What's your take on the government's current efforts like the National Financial Inclusion Strategy, agent banking, or digital ID campaigns?
Well, I think it goes along with the National Financial Inclusion Strategy started in 2012, and their basic aim was to like push financial inclusion in Nigeria to 95%. So they are basically saying 95% of Nigerians should be financially included. At that time, the percentage was about 47, and now is about 73 to 75%. So you can see they've made progress, obviously. So the government is not sleeping. They are working hard to try and improve financial inclusion. But organizations like, policies like 3 tiers KYC, which is know your customers, is a way to like help people get banked without the necessary identification or documentation that is required. So I think the government has gone a long way to try and improve financial inclusion in Nigeria.
And I totally agree. I think the government is doing really well. And then what we can do is actually, look into and do our own research on the strategies that the government is doing. And so how can partnerships between banks, fintechs, or even telcos and the government be structured for impact?
Okay, so they can be structured for impact by like doing joint sharing of data with privacy ratio. If the government knows that, oh, you are sharing your information with me, we are all sharing our informations together, we'll know what areas to improve on and what areas are actually striving and everything. So if we know that like, oh, these are the areas we need to focus more, or these are the areas that are doing well, we'll know what policies to actually implement to foster economic growth. So like if the government actually find a way to like make fintechs, banks and like central bank come together and like talk and like make the same regulatory or policies, it will help like foster like our financial inclusion.
I totally agree. I think the government and the private sector, they need to work hand in hand. Give me your information, I'll give you my information, so that we'll be able to defeat the enemy that is financial exclusion. So one thing that keeps coming up again is financial literacy. How important is education in this conversation, and how can providers simplify financial services, especially in local languages and rural communities, to encourage widespread adoption?
Well, as they say, you can't give what you don't have. So if you're trying to encourage people to get financially included, to involve themselves in financial activity, they have to know exactly what they're getting into. And so I think financial literacy is very, very important, especially in a climate like Nigeria where there's widespread financial illiteracy. How they can improve this literacy, we can first of all start from the very top, the government, and that's where we can give kudos to organizations like the CBN for the work they have been doing to try and increase financial literacy, like their financial literacy framework and other initiatives like that. But we can also go to like the financial institutions, for example, and performing things like enlightenment campaigns, as well as outreach programs to try and reach the rural communities who do not ordinarily have access to information like that. I also know about some private institutions and that make like software or platforms which you can get financial information and literacy to educate yourself and at minimal to no cost.
Oh, that's very interesting. So as we start to wrap up, we want to know if you had a direct line to the policymakers leading Nigeria's financial inclusion agenda, what would be your key advice for them?
My key advice for them is to formalize the informal sector, because in Nigeria, most of in the economy, it is more of informal jobs that are in circulation. So if they formalize this informal sector, you'll be able to like tax these people. And once they tax them, they're increasing the tax revenue for the government. This money can be used in our infrastructure, our education, the healthcare. All this can be used in little areas that actually do affect the economy at large.
I also think the government can adopt a bottom to top policy rather than a top to bottom policy, where in trying to spread out the financial inclusion net, they start at the grassroots levels, at the rural communities, at the very basic parts of society and build their way up. That way they have a wider reach and their policies will be more effective.
So thank you so much. This conversation reminds us that financial inclusion isn't just a topic for experts or policymakers, it affects everyone. And that brings me to a quick message before we wrap up. Financial inclusion isn't just a goal on paper. It's about real people having real access to tools that help them save, grow, and plan for the future. So let's not tune out when we hear terms like banking access or digital finance. Let's lean in, let's get curious. Talk to your family, your friends, your classmates, help someone open a savings account, use mobile banking, or learn a bit more about managing money. Because when more Nigerians are financially included, we all benefit. A stronger economy starts with informed, empowered individuals, and that can start with you. So a big thank you to Hameedah and Daberechi today for sharing such valuable insights with us. And thank you, listeners, for tuning in. If you enjoyed this episode, don't forget to subscribe, share, and leave a review. You can also follow us on social media for more conversations like this. Until next time, I'm Faiza Sanni, and this is Economically Speaking.